The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and it's great to be here on the 21st of July, and huge down move in the Dow, down 191 at 17,908. That's because of IBM and UTX. We'll talk about that in a moment. The S&P is only down 7 at today. In fact, it was forced down. It didn't even want to go down. It's down 7 at 2120. You've got the Qs. Let me just get this earphone back in here, and the QQQ series. At this particular point, we've got the comp index down 19. The QQQs, 1, 2, 3, there they are, holding pretty well right there in that inside track resistance area. Leg E/A in the daily, leg D in the weekly, leg F/B in the 120-minute chart with a little bit of a pullback showing right here. Monthly chart has gone to that D. I showed it last night in the webinar. Oh, thank you so much to all of you who came out to watch the webinar. I hope you got quite a lot out of it. I know I did. The thing about education, the wonderful thing about education, is as you teach, so you'll learn, or as you explain, so you'll learn. It has a tremendous reward. It's like giving. You give and you get. So I went through a whole bunch of things. Of course, didn't have much time, an hour. We went just over an hour, but I tried to get as much in as possible. Let's go through some of that today. But in the meantime, back at the ranch, gold, which got smacked yesterday really sharply, and it plunged down to the low of 1,080. Is having a little bit of a comeback. Now, it didn't go quite into that. You remember, I always say in the Chapman Wave Roman candle, first of all, Roman candles is what I call a Roman candle right here. It's a perfect example. Where it opens at a certain point, makes a fraction, a little tiny wick. That's where you want to light that candle. And then it goes all the way to the bottom, and then it tries to come back, and it comes back, but it only comes back halfway, a little bit more than halfway. This one is, I'd say, pretty much exactly halfway. And now what's going on is that it closes right at that level. You've got the long wick remaining. And my contention is, based on experience, this is not anyone's studies or anything, it's just my own studies, that if the price starts to trade consistently, if we're looking at a daily candle, what you look at is if consistently over, say, a 60-minute period, it continues, thank you, Larry, I very much appreciate it. If it continues to hold in that middle part of the lower wick, there's a real good chance you're going to go down and retest the low of 1080 in this case, or get close to it, or probably take it out. If you actually go that low, you'll probably take it out. But that, in fact, could start a reversal pattern to make a rectangle. What's really bullish is if within 2-3 days, the candle so far is good. It shouldn't have gone as low as it did, but it's a good candle. The gold is up 30 cents on my chart right now. If you're looking at this, what you really want to see is within, what's today? My news yesterday, Tuesday. By Thursday afternoon at about 2 o'clock, maximum Friday, 2 to 3 days max after the low. This should be taking out the high that was made on that Roman candle day, that's the 20th, and the high was 1132.50. And you want to see a close above it 2 out of 3, maybe 2 out of 4 times. Essentially what I'm saying is you want to turn the entire candle into a propellant. That's instead of the Roman candle that blows up when you get them at the tops. You know, we've had that happen many times. Usually within 1 to 2 bar of a top, if you see a Roman candle, especially long-legged Roman candle, watch out. Now, what happens at bottoms, in this case, a potential bottom, we don't know if it's a bottom, you've broken the arch formation, in this case it's a lowercase m formation in the daily chart. You've taken out the left side low, that was at 1143.40. You took it out, and you have 1, to a maximum of 2 sessions in my work. This is my technical study, to get right back above the left side low, in this case above 1143.40. And that propellant has to take you above the left side, a peak a peak that I call it a peak of importance. And sometimes in an arch formation, you'll see that left side peak. Or even more important is that 9-period moving average at 1134.90. You want to close nicely above it and turn the entire line into some kind of a trampoline that makes a V-shaped recovery. But the best I can see is a recovery is a little different to the pattern that you always see me do. An arch on this side and an arch on that side. So I still don't see anything yet for gold, but I do see that some gold stocks have been beaten down so badly that there's no way they can't at least attempt some kind of a bounce. And that bounce could be a nice percentage bounce. Okay, so now let's do something else. You've got the dollar in leg F/A. I'm more inclined to think of this as an AF, that it really needs a rest at 97.52. It needs to pull back to the 96.30 to 95.30 area, somewhere in there, just above. There you've got that Chapman wave inside track breakout level, and now you just want to be testing. So it's 96.80 to 96.30. If it takes it out and goes to the 95s, that's what I meant to say, watch out below, because that could say, hey, dollar's finally going to have a little bit more of a breather than these little quick 1 to 2 day contractions and then new recovery high. So that gives gold this is an opportunity. Boy, if gold can't take this opportunity to move higher, that's a shock. Crude oil, I'll just finish this up and then we'll go to our callers. You've got crude oil trying to make some kind of a bottom. That coincides with the Dow. That coincides with the dollar trying to reverse to have some kind of consolidation. Crude oil at 50.97. You want to see this same thing. You want to see it above the 52.05 period exponential moving average resistance, trying to get to the 53.12 to the 54.36 area over the next 5 sessions. I'll give it all the way to next week by Friday. A week and a half you've got. Crude oil, you've got a week and a half in which to rally, because that arch formation in the weekly chart is formidable. It really is. Okay, anything I'm missing? Of course I'm missing something. I'm missing the bonds. Last night we looked at the yields going back to 87 was the start of the channel, but it goes back even further than that, to 83, I believe. So now look at this. The TLT is trying to rally. It's at 118.33. This is going to be very important, because if the TLT is able to make this cup formation, use the 200-period exponential moving average of the weekly chart to push higher, and that would make bonds trading right now at 151, 28 and 32, 28, 30 seconds. That will say that the bonds at the 151s needs to get to the 155, above the 154.5 level. That's the 200-period exponential moving average resistance in the daily. Because if bonds start to come back down, then yields will start to rally. That's going to have other connotations. It's going to give fewer and fewer areas of movement in, say, home builders. It's going to be interest rate sensitive stocks that are going to not be helped. But the XLF, the financials, could in fact benefit a little bit. They're having a very good run. They've gone to a recovery high. Leg E in the monthly, leg A, B, C, D, E in the 120-minute chart, leg B in the daily. And we're going to see, maybe we're going to get this single leg A up, which sometimes goes to B, in the daily charts and of many of these indices. We'll talk about that in a moment. Right now, I want to go to Mike in Ormond Beach. Mike, how are you?
Pretty good, Basil. I was wondering if you think now might be a good time to get into the DXD, or do you think it might be too late?
Oh, no. Well, first of all, it wouldn't be too late if we've got that single leg up that says, in fact, all the upside strength has been taken out. and that now we're looking at the downside. But the stochastics at 91%, and the MACD is still quite good in the daily chart of the Dow. You see, we've been here before. I'm trying to think of when it was. It must have been the last earnings report, so we have to go back 3 months. So this will be July, June, May. Was it in February, March, April, May? Yeah, it must have been in May. So in May, if I recall correctly, we had IBM also with an earnings report that came out, and that earnings report was very poor, and it tumbled. I can't even remember when it was. It was somewhere in there. No, that's March. Here's May. So does that make sense? How could it be May if we were in July? May to June. June, July, August. Oh, okay, so it has to be before that, April. So if it was in April, I don't know when it was. I should try to find it. But I remember very distinctly that I'm pretty sure it was the last one, because one of the earnings reports, IBM, really got hit badly, and yet the market held beautifully. In fact, I think the market was up quite nicely that day. So what I'd be doing right now is... question is it too late? Well, it's too late for risk reward only in the sense that it's gapped up. Yesterday it was trading at 20, and right now it's at 20.48. But if in fact we are making the turn, and your question really pertains to, have we made a turn in the Dow
right, and
that is not going to recover enough to even test that area that I said was a possibility, that 18,300 area? And in fact, something I spoke about with Tom yesterday in an interview, and I mentioned it last night, that bottoms are formed in unison, but tops are sometimes, they unfold in a certain rhythm that is not a unison rhythm, it's a cycle rhythm. And each index has to complete its cycle. So your question is a good one, because what it's saying is the way IBM and UTX, and I think Verizon, let me add Verizon here. Yeah, I think Verizon as well. The way just these three stocks are impacting the Dow is enough to say the upside at this particular point. So I'm only looking for a retracement in some of the indexes to kind of fulfill some of the upside requirements. That's just a little bit more to go. You know what? I'm going to take the opportunity, if you don't mind. I'm going to do a couple of the indexes so that I can really I want to give you something that's comprehensive. It's real easy for me to say, hey, you could start a position right now, but it should be a small position, and then you can add to it on the next bounce that fails. That's basically the way I would look at it. But I just let me do it takes 1 second. We might miss 20 cents or something on the position. Not even that, 10 cents probably. So let me take a moment. IWM, the Russell 2000 is at 124.18. I had already drawn in the arch formation. It's so interesting that this is happening today, because last night in the webinar that I did for subscribers, I spent a lot of time on a particular sector. This morning, I think I hear the music. Yeah, this morning I wanted to short that sector again, and then I thought, you know what, just take one more day, give it a breather, but it would have been a great day to start that short. Hey, let me do this during the break, and I'll be right back. Can you hold on?
Sure.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Downtown 204. S&P's down 9.60. It's starting to catch up. Not catch up. It's starting to go the same direction. Catching up would be down 20. But right now, it's been holding very nicely. So let me just do this. So Apple, which is going to be very important after the close, is showing signs in the chart that if there is a response tonight going into tomorrow morning, I'm not really caring at all about what happens in the overnight session. I want to know exactly what happens in the first 30 minutes of trading tomorrow, because a lot of things can happen with Apple. We've seen that before, being up pre-market or down pre-market and then changes direction afterwards. So I want to see how the market responds. But it's got a head and shoulders pattern. It's not the classic head and shoulders pattern, but it's got the left side at 133.60 and the top that was made so far on the first week of the 1st of May at 134.54, and this pop that it had yesterday and today is in the 132.90 area. So that says you've got the potential for the left side, the head in the middle, and the right side to suggest that there could be a sudden plop to the downside, as well as a 120-minute chart in leg EF, I believe. So we've got now the potential for the QQQ series to also be hit. But this is so interesting. The IWM chart has decisively made that H pattern. That's number one. It has the same look, in fact, as Apple, but it never went quite as far last weekend rallying to the 127.13 area. It stopped at 126.74, just below. And this week so far, it hasn't been able to take that out. So that's suggesting to me that at best, you're looking at a rectangle formation with a retest of the 121 to 120 area in the IWM. And at worst, you're looking at a breakdown, and that breakdown could take it into the 119, 117 area over a period of a few weeks if it starts to roll over at this particular point. So here's my thinking. The way I looked at the Dow and the way I see this disparity between the Dow actually being down 1%, but the S&P only being down 39%, the IWM being down 0.61, and the QQQ series being down just a fraction, being down 0.23, and the New York Stock Exchange, which is the very big, broad New York Stock Exchange, down only 0.36. I would not be surprised if there's some kind of an attempt to rally. So
Okay.
I'm going to make the suggestion. You can think, you even have time to think about it. You have to just rush and do it. And it's just a suggestion that one of the sectors that I've looked at that I believe is highly vulnerable, with many earnings coming out, very important stock earnings coming out over the next week or two, there again, I see limited upside, even if there is upside. So if you were looking, I would not go further than a DXD. That's 200% short the Dow, because the DOG also is a good possibility just to sort of get your foot in the door to give you a real feel. That's 100% short. But I would only say to you at this particular point, even though the weight of evidence is starting to say to me that the upside I thought was fairly limited, with just 150 maybe points over the recent high is maximum to the upside in the Dow. S&P only needed 2 points. I don't think it even got that today. 2 points higher to make its all-time high. I think that this is a time where if you want to nibble, I know that you are used to starting a small position and that you are quite comfortable adding to that position or putting a stop in to say, hey, I'm wrong. So my suggestion is, if you're going to go for the DXD, because the Dow is the weakest of the links here, then I'm going to suggest at 20.46, you only start a small position. Why? I'll tell you why. Because if this, in fact, is the rollover, and even if there's a bounce in the Dow from 17,905 to the 17,960 to 18,020 area, and then it can't go further and it starts to roll over, you can always add to your position.
Right.
And at the same time, we will know if that's a possibility. Why? Because Apple comes out with earnings that is interpreted as very positive, and the QQQ series doesn't fail at yesterday's high of 114.39, right in the up channel resistance area. In fact, what it does is it takes out the high, and that would say to you, don't do any adding to your DXD. Wait, because there's a good chance you're going to get a much better opportunity to actually buy more. And that's this is a situation where if I get the proof that the Dow is not there's just nothing there at all anymore, there aren't enough stocks to rally, and out of my Dow quartet, GE, IBM, TFNN, and UTX, we've already got two big ones, IBM and UTX, being clobbered. I don't know what's left. So all I'm saying is that I would start a little position here, and if we start to roll over, Dow goes to 17,850, you could actually start adding to that position.
Okay.
Does that help you?
Yes, it does. Yeah, and I thought...
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're still on. Mike, you still there?
Yeah.
Yes, you're there. Good. Okay. So now just grab the IYC, which is the iShares Dow Jones U.S. Consumer Cyclical Sector Trust. Whew, what a long name. And it had the pattern that I discussed last week, which was a leg, Chapman wave, a stalk leg formation, makes the body that oval pattern, and then it breaks out and it goes just slightly higher. It goes to leg D, in this case, sorry, leg F / B with a neck formation. And it looks like the MACD could turn down and the stochastic is running, but it's only at 73% in the weekly chart. But it's just made a peak D in the daily. And the 120-minute chart is really looks like it needs to come down from 148 down 87 right now, having just made a high, an all-time high, in fact, of 150.03. It looks like it's a little bit vulnerable short term. But when I look at Netflix and Google and some of the real leaders in the NASDAQ, there is some internal strength. Even if I put this up, when I put the, go back to my E-mini chart, look, this is, what's the big deal here in terms of the E-mini? So it's gone all the way to, from 2034 to 2126. That's a whopping single leg up just about incline. And what has happened is, that should be a B, actually, I should have changed that. That should be a B, not an A, I'm sorry. That does make a difference. And that suggests that there's just enough residual strength to push higher over a couple of days, as long as it's a 21.13 right now, as long as it doesn't close under 2100. If it does close under 2100, we've already begun that single leg A failure pattern, because the stochastic will probably come back to 85 or 83 and still continue lower. So I'm inclined to say to you, you can start a position because you're looking at one of the weakest indexes, and at the same time, I wouldn't get carried away. Why? Because if this is the kind of top that I was discussing last night in my webinar, that has to do with Elliott wave in 4 down in many of the charts, but most importantly, one of them that I spent some time on, it could be 5 to the downside if I'm correct. Then you'll be able to add to the position. So at least you're in it. I just, just money management says don't get too carried away. Or if you want to add to it, because later in the day, instead of being down 203, the Dow goes back to minus 235, then maybe you can add a little bit more, but that one should have a stop. And as long as you know what your stops are and you're very strict about it, I think that this could turn out to be at least an initiation trade that has the potential to become perfect timing, because you got within 200 points of the recent high, rally high. But at the same time, I'm looking at the rotational strength, and that rotational strength says, hey, I'm trying to rally here. What are you guys interfering with me? I mean, you got Netflix. Netflix right now is at, it's up $2 at 112. Have you made a peak D? Google, this is not Google L, it's Google itself, is acting very well. It's up $6 at 669. These are the leaders, but the leaders have a way of helping resolve some of the short-term downtrends when they occur. So that means if these guys start to give it up, then you're looking at a much deeper correction. So I hope that helps you, just give you a sense of what I'm looking at here. And I must say, to be quite honest, it was UTX. I was quite prepared for IBM to drop 6 points, maybe 7. It's actually dropped a lot more. But it is UTX's action, my intermediate term pilot light indicator out of my Dow Quartet index, that is really telling me this is not a good sign. And GE is acting pretty darn well here. It's 27.11. It's just down a fraction, holding at holding the 9-period exponential moving average. So this is a mixed market right as we speak. That's why I didn't want to get too carried away and say, hey, yes, pile in. But I do want to say I think you're right in trying to start the position.
Yeah, that's what I was looking at. A little position, and like you said, I thought the first area where we could get some support to be right around 17.8. And then I think you said if we break through that, it might be safe to add more, and then maybe we could get down to the bottom of the rectangle formation, which would be around 17,600 or 500, right?
Well, I've made it for a long time. The 17,500 area has held so well that if we start to break down there, I think that we're going to start looking at lower highs and lower lows for a period to come. But on the 120-minute chart, the Dow is 17,873 as very important support, and it almost got there earlier. It went down to 17,888, so it's real close. So yeah, this is a day that was exacerbated to the downside by 3 Dow stocks that had poor earnings or a poor outlook, and I include Verizon in that. And yeah, Verizon's struggling. It's down 119 at 46.91. Thanks so much for calling and giving me a chance just to elucidate on some of those aspects.
Thank you. Bye-bye.
Thank you. So, folks, I wanted to do this. We're looking at the VIX index. Remember, I always make a big deal about the VIX index. I looked at the VIX index today via the prism of some of the trading vehicles. Not today, it was last night. Spent a lot of time. And then early after my webinar, and then again this morning, just looking at it and saying, all right, trying to, everything about it says it should rally, and IBM is weak. But I have to tell you, it's up 2.78% at 12.59, the VIX index itself. with 3 candles, very small candles that suggest, yeah, it's trying to turn, but it hasn't got the momentum yet in the price movement. But what was most important, and I spoke about this in my webinar last night, is that the decline last week in the weekly chart pulled back so much to 11.93, and this week we went even lower, went down to 11.71. It took out the 11.82 low of May of 2000, May the 22nd at 11.82, and I cannot, unless it's what's called a rogue wave to the downside, and I don't want to get too carried away and start using elaborate techniques. I'm just going to say it broke it, it pierced it, and now we need to see that if the VIX index this week is unable to break into the 14s, it's at 12.59 right now, up 34 cents, but instead remains in the 12s or the 11s, that's going to continue the buying pressure. So on a purely technical basis in terms of the Chapman wave, because we started the wave count from way up at 25.20 the week of the 19th of December of 2014, this could, in fact, be a rogue wave to a G. Right here, I'm going to type it in. Let's do it together. So I'll get rid of that. I'll change it to 1171. And you'll see that this 1171 is the same thing that we would see if we were looking at the upside and it made a peak F, and then it started to come down. The technicals were negative, in this case, obviously positive, because it's upside down. Let me do this upside down. So let me make a let me do this. Oh, this will be fun. Let me do it right now live. Go to this. Get that. I'm going to copy it right here. I'm going to paste it over here. I'm going to make it smaller. Oh, this is fun. You know what I'm doing? I'm taking the image, I'm resizing it first so that we can get a good look at it. Resizing. I stopped resizing, and now I'm going to flip it around. I wish you could do that in the TradeStation charts live, but it doesn't matter. So rotate, flip once, vertical, there it is, and now I'm bringing it over. Look at this chart. You see, it went low to an A and then a B. B minus, because it comes down and starts another. A, B, C, D, E. Is that a little higher? Oh, let's call that an E, doesn't matter. An E, and then you can put a down arrow because it fell very sharply, and then there's a sudden move up that takes this by a fraction. It goes to a new high. If this is a rogue wave, a Chapman wave, rogue wave, what you will see is that it will, this bar that broke to the new high, excuse me, by the end of the week, it's a weekly chart, by the end of the week, should in fact be way down below the 9-period moving average. All right? So give me a second. I just want to show you. And look at the stochastic upside down. Made a top. It tried to rally. That failure will be a failure if instead of continuing up, it turns around and comes back down. No, sorry. If it turns around and comes back down, the price will go up. So, and here's the MACD trying to cross positive. So let me get this out the way. We'll talk about it in real terms. So this is the potential rogue wave to the downside. And at the same time, 1171 is the level to watch. And there's the MACD. If it deflects and comes back and makes an M pattern, that would be very positive and say that the price is going higher. If in fact it breaks lower and the stochastic goes from 40% to 36%, the VIX index will come down. So I hope that's explaining it. The mirror image, that's all we're looking at, right? And that's why I should, look at the chart again. Probably I should do a naked chart. You can see it much better. But that could turn out to be a rogue wave if in fact it suddenly plummets. And in this case, that would be if in fact it starts to rally over 1391 into the 14s. That's the upside down characteristic of a rogue wave. All right. If your eyes got fuzzy and it wasn't very clear, I'm sorry. But just think of it, if you understand the concept of the rogue wave, this is the exact opposite. That's all you need to know. And that would say that this rally in the VIX index is going to continue. I just have a feeling what we're looking at here is really a rectangle formation for just a little bit longer. That's why I didn't want Mike to get carried away. Let's go to Brenton Martinez. Oh, no. Hi, Brenton Martinez. How are you?
I'm doing wonderful, Basil. I wanted to compliment you on another great webinar. They're always very informative, and I've been a subscriber for a couple of years now, and every one I enjoy. I know you put a lot of effort into them, and I do appreciate that.
Gee, thank you. I do appreciate, yes, I did put a lot of effort. You know what's funny about these webinars? I have pages and pages and pages and pages of little yellow stickers and books already here that I could never get in that short hour. I've got notes, I've got books. I find them all over the show. Months later, I say, oh, gee, this is a whole section that I didn't talk about. But I really tried my best to nail just what I thought were absolutely the most pertinent things that were relevant now. And that's why I also spent quite a lot of time on the chart formations themselves. You'd like to look at?
Short IBB, I actually got in a little ahead of the move. It just made up to 400. I got in around 398, so I missed it just slightly, but it seems like today's the first kind of uglier down candle we've had, and I'm using the BIS. I've always kind of struggled with this one. The IBB, I like using the options. That's kind of what I do, and the ones on the IBB, they're just very expensive, and so I'm actually doing calls on the BIS.
Okay, I love that idea. You know, and what month are you looking at?
I went out to September.
Good. Oh, I'm so pleased about that. So, folks, what we're looking at is the BIS is the 300%, 200% short the IBB. It's the ProShares Ultra Short NASDAQ Biotech Index, trading at 25.19. We've traded this many times, taken tiny losses, taken nice gains once in a while, but mostly we kind of break even with the darn thing. And only reason being the 200% short the IBB. IBB, of course, is the index that every fund manager who wants to really perform grabs it at any time on any pullback, whether it's a 1 hour pullback or a daily pullback. It never has weekly pullbacks on the IBB. And then they made a fortune. I think that time has run out. You could maybe make a little more. There's a possibility there could be real good news in one or two of the biotechs coming up. I don't think so, but there's a possibility. And that might allow the IBB one more spike. But the BIS trades very poorly unless you're absolutely correct. Look at this 9 period. In fact, I realized the other day, I said, what a silly thing. You could have shorted the BIS back in the 80s and 90s, and yet it's down at 25 because it decreases so quickly when the IBB rallies. So I love the fact that you are in. If you got in a little early, right now you're looking good. That's okay, because a little early with the IBB sometimes can be hazardous to your health and your wealth. So I think you've done very nicely here. This is the only thing I'm going to say to you. You've got the options. This is the time. Boy, I might regret saying this, but I really believe strongly, especially what I showed all that work that I did last night in the IBB, etc. I think this is the first time that you can say holding the options on the call options is really the best way to go. Can you hold on 1 second?
Yes, I can, Basil.
Okay, I'll give a little summation as we get back. So we've got Brenton Martinez, California, and Rich in Orlando, Florida, and I'll be right back with both straight after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and so we've got Brent from Martinez, California, on. And looking at the IBB, it's down 6 at 392. No big deal for this particular index, but I do think that peaky is something to consider. The MACD is still at 93%. Sorry, the MACD is still very strong, and the stochastic still at 93%. So until it breaks 387, that stochastic is going to be there saying, hey, there's still some strength, be a little careful. And that allows you to say there could still be one or two pop-ups coming up over the next week or two as we go into the final earnings of really very important, some important biotech stocks. So, Brent, I don't even take time to do anything more than to say to you, congratulations. I think this is the move. Number one. Number two is because you've got options so far out, you can allow the little whipsawing. The way the chart is looking, the monthly is becoming somewhat parabolic. It isn't really parabolic yet, but it's getting there. My thinking is it will be pulling back, and my target would be the 377 to 375 level over the coming 3-4 weeks. So, and then if there's any bounce after that, we'll see what happens. But I think you're in the right position. I hope that helps you.
Oh, of course it does, Basil. Thanks so much again, and Just always appreciate your help. Have a great day, and I'll talk to you soon.
Thank you very much, and I appreciate you calling. Rich in Orlando, you wanted to look at VNR, is that correct?
That is correct, Basil.
So Vanguard Natural Resources, I'm going to make a suggestion here. It is a well, I don't have to tell you, it's a horrible looking chart in every monthly, weekly, everything. This is the first time that there's a chance for it to have a little bounce, but I'm not expecting more than a little bounce, but it could be a nice percentage. Do you have any position now?
No, I don't. No, I don't. Mostly, my interest in it is that it's the dividend that it pays. It's an energy trust company.
Oh, that's right. I've heard this before. I've never traded it.
My story on it is I missed it 14 years ago when it was around the same level as it is now. And now it's kind of gone. It was up in the 30s, and now it's come way down into the 10. And it's a question. I don't know. I mean, I know that the chart looks terrible. But from the tone of your voice and the question I'm getting from you, you're looking at this as a potential both dividend and capital gain over a period of 3 to 5 to 6 months. Is that the way you're looking at it? Or even longer. I just put the money in it and let it lay. Because it's paying, the dividend it pays is enormous.
Yeah, so those dividends, be really careful when you get big dividends. They tend, over a period of time, you suddenly get the 1 month, the 1 quarter that it says, you know what, we can't pay that dividend, and then the next month it's less. I'm always very skeptical of that.
I agree, but historically this one is paid all the time.
Okay, so now this is what I'm going to say, because NAT, which is Nordic Tankers, the guy did the same thing. He paid and paid and paid, even when the darn thing went all the way from the 20s to the 8s or something like that, and now it's at a huge rally. So I'm going to make a suggestion.
Sure.
Why don't you just start the smallest position that you can right now? Just get a feel for it for the next week, because I think it's got a lot of support, just a little bit underneath 1060. 1044 was the low. I don't think it would go much lower than 1020 without at least a bounce. So I'm thinking that on a worst case basis, it goes a little bit lower, maybe even to the 9s, but it'll come back to the 11s. So I'm going to suggest, rather than put a lot of money in and then find out, put a little money in. I'm really talking like 30 shares, just a little bit, to get a feel from today's action with a doji candle, potential reversal candle, going into next week. Today's already Tuesday. Can you call me Friday or Monday, and then let's look at it again? And don't be surprised if it does go a little lower, but I think at 1075, you will get your 1075 back, even if it takes a little while. I want to see if it can go to 1130. So I hope that helps you.
Thank you very much.
Thank you very much for calling. Folks, stay tuned. You've got Kevin coming right in. Kevin Hinks coming in here for the Think or Swim Options Hour fabulous show. And I'll be back tomorrow. Have a great day, and thank you for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.